Welcome back. All right, let's go to Mary in Richmond Hill. Go ahead, Mary.
Thank you for taking my call. My question is on Shopify. I was trying to buy some this week, but the news about the Class A share got me really confused. Your opinion, please. Thank you.
Okay. So, look, Shopify is, I think, a really interesting company. We're investors and continue to buy shares here. I think that when they did an issue this week, it spooked some investors. Stock was down 10%. Again, going back to what I said at the beginning of the show, the way a market behaves to news tells you a lot about the market. The stock opened down 10%, closed up 2% on the day for a 12% swing on the day. What that tells you is there's a lot of people who want to own these shares, waiting for a pullback. I think that's the case in a lot of companies in the space that they're in, of course Amazon and many others. So I like the sector. I like Shopify. They're growing their revenue at north of 75% year over year. They've got a giant addressable market that they can continue to sell to, and they're doing a really great job. Just as a side point, stock's trading at $90 US. So there's an old adage. 9 out of 10 stocks that trade at $90 trade at 100.
Oh.
Okay, so take that for what it is. That's not a trading rule, but it's something to keep in mind. I think that the stock is behaving extremely well. And again, there's another expensive company, but there are a few key themes in this market that have been very resilient, and this is one of them. Use a stop loss, identify price below the price you pay, where you'd go to the sidelines. But this is a good sized position for us, and I'm quite bullish.
Okay, now let's go to a tweet from a viewer whose handle is Vegas Guy 391. I love that. The question is, could I please get David's thoughts on Twitter?
Okay, so Vegas Guy. As a firm, Barometer does not buy turnaround situations. It's just not our strength. Having said that, I personally own some Twitter shares that I paid about $12 for. My view was they've got such an amazing franchise that we are starting to see it turn. Another simple trader rule, something that makes a significant low and then makes that same low or close to it 12 or 14 months later and turns higher will tend to be a low that has some staying power. So this for me is a trade. But the stock's been behaving extremely well ever since. And of course, social media is a sector that's been behaving well. They've got a great franchise. They just have to really figure out how to monetize it. So this is a higher risk trade and probably not one for Barometer clients.
I see. All right, Bob is in Halifax. Go ahead, Bob.
Thank you, Paige. David, I'd like to get your opinion on Align Technology.
Okay. Now, Bob, you're going to open up a wound here.
Uh-oh.
Because this has been a debate that's gone on inside our investment team for over a year. And I'm the one who's a little sore over it because it's a company that I really like. We don't own it currently. Align has this technology for braces that is non-invasive. It's easy to apply, and you don't have to be an orthodontist to apply the technology. They're growing very rapidly around the world in many, many markets. They're sort of using a Lululemon approach to going out and socializing their product in local markets. And they've been remarkably successful in marketing the product. So it's a unique product. It's got a very large addressable market. It appeals to mature individuals as opposed to kids because it doesn't really show up in your mouth. And there's always risks. But I said earlier, I like medical devices. And I like large addressable markets. I think Align looks quite interesting, and I wish I was a shareholder.
Invisalign?
Yes, it is.
Okay.
It's the Invisalign orthodontics.
It looks like a retainer more than a clear retainer.
That's
okay,
right.
Gotcha. As a former metal mouth, I wish that I knew that technology when I was a kid. Okay, now let's go to Carl in North Vancouver. Go ahead.
Hello, David. What's your guest opinion of the BlackBerry DBRY Nasdaq? It's speculation. Also, it's a price target and street consensus split. I hang up and listen.
Okay. Carl, I'll be honest with you. I'm not sure I can value BlackBerry for you. This is a company that obviously has had a great run recently. It was obviously a company that was badly beaten down over a long period of time. They have an incredible amount of intellectual property, and there's some question as to whether somebody else might like to own it. But I can't give you an upside target other than to say technically the stock's acting great, but I don't have a view.
I mean, today it was up, I believe, 8 or 9% on hopes for the QNX division, which represents a pretty small chunk of their total revenue. But do you think that is something that investors should be more focused on, is growth in the sort of Internet of Things?
Listen, frankly, I would prefer to, when I look at a set of stocks that are behaving well and rallying in a market, I prefer not necessarily to go to the last one in the group that started to rally. I like to go to the early leaders because there's generally good reason for it. It may be that BlackBerry is going through a big turnaround. I'm just not there.
Gotcha. Okay, we're going to take a break. We'll be right back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management, taking your questions on North American large caps. Get in touch.